What on earth just happened with Honest? This company has fallen 20% today after their earnings. So clearly there had to have been things that went wrong. Well, in this video, I'm gonna go ahead and dive into these earnings and show whether or not I've started a position in this company and if I'm planning on buying this company even after this drop. Okay, so first let's look at the Q4 results. We had an overall revenue increase of 3%. And honestly, no pun intended, that does not sound like a good number at all. But when we look at these numbers and compare them to 2 years ago, they grew over 26%. Now the question comes down to, why would the company want to compare results from 2 years ago? And I truly believe this goes to show that their numbers were sped up because of COVID. Honest grew numbers significantly this past year because of their weakest segment. And we're going to see later on that these numbers fell off a cliff. But when we look at their two largest segments, which are the core products for this company, that's where I'm most impressed. So their two biggest categories are diapers and wipes and personal care. For their diapers and wipes, they had 16% year-over-year revenue growth, which is crazy when you consider that their overall TAM is not going to increase in this segment. So to be growing at this amount goes to show that they're outdoing their competitors. From my previous video, I needed to truly see if they were taking market share. And when you consider the fact that we are no longer locked down where people aren't storing up a whole bunch of wipes and diapers and hand sanitizer and all those different things, this increase is significant in my opinion. I mean, their diapers outpaced their competitors by almost 3%. Now, one of the things I think is important to note is that they had 24% growth in their diapers business because of the new diaper product that they had come out. But there was a decline in wipes because of supply chain issues. The reality is we won't know exactly how much of an effect these supply chains had on the wipes. But during the conference call, they admitted that there is an increase in consumption when it comes to these wipes. And most of the issues happened because they were out of stock. So to grow 16% when a portion of your main business is declining, that's really nice to see. Okay, now their skin and personal care segment. They increased revenues 26% year over year. Personally, I think this is where a lot of their growth is actually going to come from in the next few years. I mean, we live in a generation where personal care and skincare are by far some of the top priorities in people's lives. So the overall TAM in this segment, in my opinion, is going to grow incredibly over the next decade. And that's going to give Honest a huge opportunity to continue to grow revenues year over year. Now, when we look at their last segment, which is household and wellness, it was awful. They got their revenues cut over half, going from $14 million to $4.5 million. COVID definitely sped things up in this sector, and it was honestly impossible for them to meet these comparisons. But with this massive decline in revenue, to me 3% growth this quarter is not bad at all when you try to compare it to a time where everything was shut down and all hand sanitizers were bought out. Plus, let me put it this way. If we completely remove their household and wellness segment, they would have increased revenues 19%. So from that perspective, that's really solid growth. But let's go ahead and look at their gross margins. Compared to a year ago, their gross margins decreased 3.6%. And that came because of the increase in their inventory for the household and wellness segment and higher costs for raw materials, transportation, and warehousing. So the reality is that the inventory reserves won't last long. And I honestly think by the start of 2023, we will see the cost of raw materials and transportation start moving down. Okay, so now the operating expenses. Even though it looks like there's an incredible decrease, we need to be real and see that honestly, it didn't change much at all. Most of the expenses a year ago was because of the IPO, but they had an increase in market spending and a decrease in research and development. So their overall business expenses are about break even year over year. Now, another thing that I was concerned about was the amount of cash that they would have on their balance sheet. But over the past quarter, they gained $3 million and have no debt. And that brings me confidence that they will be able to sustain themselves before they become profitable. But I firmly believe that was the outlook that caused many investors to sell. For the first quarter, revenues are projected to decline 15%, and the overall revenue for the year is expected to be flat. However, Q1 is probably going to be the last quarter that we will see a drastic fall in the household and wellness segment. So I believe that the revenue generated from Q2 to Q4 is going to actually be a better representation of what Honest is going to do in the years to come. Okay, now their adjusted EBITDA. They're expected to fall a couple $1 million to a loss of $5 to $10 million. But they're expected to lose almost all of that in the first quarter. That means the rest of the quarters for the year are either going to be positive or just around zero. And I believe this is going to be really important when it comes to projecting profitability. That's why myself and a couple of analysts have this company becoming profitable in 2023. However, even though the outlook didn't satisfy investors, I don't understand the sell-off when you consider the news that came out in their conference call. They have 3 different partnerships that I believe could grow this revenue incredibly over the next few years. First, when it comes to their diapers and wipes, they have started a partnership with Walmart and will start selling their products on the web and then in the store by the end of the year. When it comes to personal care, they started a partnership with Ulta, which is one of the largest, if not the largest beauty company in the world. And then they also partnered with GNC for their new supplement products that they have coming out. So when you consider all these new partnerships, it's hard for me to not see this company grow at least 3% this year, and then have stronger growth in 2023. But one thing that I think people missed in the earnings call is when Kelly Kennedy said once they get past these headwinds, which could go into 2023, they're expecting double-digit long-term growth. And that is key for Honest because you don't see too many companies accelerate in growth. So what am I doing? Well, because I've spent much more time researching this company and getting my questions answered, I will be starting position next week. I think there are still some headwinds that they need to get figured out. But I do believe that overall as a business, they're in a much safer position than they were a quarter ago and have more growth ahead of them. Now, in terms of my portfolio, I can maybe see this one reaching a top 5 position. But because of the headwinds over the next few quarters and inflation still affecting this company, I can't make this one a top 3. When you consider some of the other companies that I have like CleanSpark and Palantir, inflation doesn't have much an effect on them. And so I can continue to add to these positions with much more confidence than something like an Honest. But I do believe that by the end of 2023, Honest will not only have double-digit growth, but will be profitable. With all that said, I hope you guys enjoyed this video, and if you did, hit that like button down below. That helps this channel immensely, and I would love to hear your thoughts on the Honest company, so feel free to leave a comment down below. And if you're new here, hit that subscribe button down below. That way you are notified when new content comes out. Hope you guys enjoyed the rest of your week, and we'll see you in the next one.